Good morning and welcome to this Wednesday, December 18th edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, I tell you, I'm going to take on a big task today. I just wrote in my Trading Places blog, I'm going to try to go through the 100 NASDAQ 100 stocks. So I'm going to try and go through all of them in just a bit. But just a couple of things to get out of the way before we go there. First, I just want to take you to EarningsBeats.com, where you do need to be aware of the Market Vision 2020 event. It is coming up on Saturday. Let me see if I can get this up here for you. There you go. It is coming up here on Saturday, January 4th, 2020. If you go to the top, if you go to EarningsBeats.com and go to the top on the tab, up the tabs here, click on the Market Vision 2020 tab, and that brings you right here to this page. But you can check out the agenda, the people that are going to be talking. We've got John Murphy, keynote speaker, and then a lot of my good friends and colleagues from Stock Charts joining us for a day of forecasting and visioning what we may see in 2020. I'll let a little bit of the cat out of the bag. As you probably already know, I'm extremely bullish. I did see that Fannie Mae came out and raised the forecast for home builders in 2020. I think we're going to see a lot of that type of economic improvement and forecasting as we go throughout the year. I think it's going to be a big year for equities. But may have some of my colleagues disagree with me, so you may want to check that out. Anyhow, if you go in here, you can see this click here to register. Just click on that link, and it'll take you right to the registration page. All right. Okay, it's going to be a busy day, so let me see if I can get through all of this quickly so we can move on to those NASDAQ 100 stocks. First, I just wanted to point out that we did set some new records yesterday. Dow Jones Industrial Average up 31, the S&P up 1, the NASDAQ up 9. Small caps, S&P 600 small cap, really nice day relative to the rest of the market, breaking out there to a new high, as you can see, up at 1,015. It was up 0.75% yesterday. Currently, 10-year Treasury yield sitting near 189, 1.89%, unchanged. Haven't talked about consumer discretionary leading the market very much lately, but that's exactly what happened yesterday. Consumer discretionary up almost 0.5%, financials up 0.4%, and utilities up about 1/3%. Those were really the only three that made any serious move to the upside. And actually going back here to discretionary, I don't want to slough it off here. This is a pretty big move here, taking out these highs from back the last few months, finally catching up with the rest of the market, making a breakout. So we'll want to watch discretionary into the end of the year. Two areas that led discretionary yesterday, both retail groups, specialty retailers up 1.65%, and then broadline retailers up 1.15%. Specialty retailers, you can see, actually made a breakout above that November high. Broadline retailers still have more work to do, but this sideways consolidation, if we break above 2,000, would be very bullish. No economic reports out today, but again, here's your 10-year Treasury yield. Currently right about 1.89%. If it goes higher, it would be extremely bullish for equities. If it goes lower, I think the equities probably still go higher anyway. It really comes down to why the 10-year Treasury yield is moving lower. If it's moving lower simply because inflation is not a problem and the Fed has no pressure to raise rates, then that's a good thing. If it's moving lower because the market foresees economic deterioration, then that's a bad thing. But we'll see that in the equity charts. We won't see economically sensitive stocks going higher if the bond market is telling us that we're going to see economic improvement ahead. So areas to watch would be areas like financials and industrials, especially financials. The banks tend to do really well if the 10-year Treasury yield is moving up, and especially if that spread is widening between the long end of the yield and the shorter end. So you want to watch the banks in particular. Other areas like asset managers, investment services, those types of groups will not do well if the economy is going to weaken next year. So if you see financials and the banks and all those groups going up and the 10-year Treasury yield going down, chances are it's because inflation's not a problem and there's no threat of raising rates being raised by the Fed. All right, let's move on to earnings rather quickly here. Got a few reports wanted to go over. FedEx missed on top line, missed on bottom line, down 7.5% pre-market. This is why we follow relative strength. I've talked about FedEx over and over and over again. Don't like it. The stock needed to make a breakout to help the delivery group. As you can see, delivery just been going sideways here for a while. FedEx didn't come through. UPS continues to be the better trade there. CTAS also reported. This one looks a little bit better. You can see the group hasn't made the breakout, been consolidating. CTAS has been consolidating as well, moving up. This could be a cup. Stock is up about 1%. Beat on the top line, beat on the bottom line. SCS, this is Steelcase. They beat on the top line, beat on the bottom line. Look at that nice little cup, little handle. Well, we're getting a breakout today. 5.5% stock is up in pre-market action. And this one actually had been looking pretty weak until the last 6 weeks. And all of a sudden starting to see some improvement. That should see further improvement with today's action. One report from this morning, General Mills beat on the top line, beat on the bottom line, up 2% in pre-market. It's been okay. It actually has shown a little bit of relative weakness here in the last couple of months. The group's gone higher. The stock is up 2% pre-market, so that's going to take it up to about 53 and change. We'll see whether or not we can make a breakout. I suspect worst cases we go sideways. Best cases we do see that breakout. All right, let's go ahead and jump into this NASDAQ 100. Before I do this, I want to show you all how easy it is to get the NASDAQ 100 into a chart list or any index that has 500 or fewer charts in it. So if you go down to the scans and you click on this new scan and go down under indexes and ETFs, click on the NASDAQ 100, or down here you got the S&P 500, 100, 400, any of these that are less than 500, 600. I haven't tried to see which ones would download, but you can only get 500 in a chart list. So anyway, take this 100, add it. So now there it is up here. Group is NASDAQ 100. I don't care about the volume, and all these stocks are going to have enough volume. We're going to run the scan. Matching results 100. So now you know you've captured them all. I'm going to take this. I'm going to replace it into, I already have this set up, but I'll just show you. If you already have a chart list set up, you can call it whatever you want. I would suggest NASDAQ 100 so you know what it is. But here, NASDAQ 100 components, if I click that, all of these charts now have just been saved into this chart list. Now, if I take one of them and look at it, it's in like my default, which does not include my relative strength. So what I'll do is I'll go over here and click on my relative chart, use those style buttons. That saves you a lot of time. I don't have to go in and change my charts manually. They're already stored in these style buttons. Now I've got the chart the way I want to look at it. So if I go down to the bottom here, under chart list, I can apply this chart style to all the charts in the chart list. Apply style to all. Okay. Boom. All 100 now are set up in this chart list the way I like to look at them with relative strength. If you didn't follow along, this is being recorded. You can always follow us over at YouTube. All these recordings go up. Check out the different playlists. My daughter Erin has set those up over there. It's really nice. I went in there this morning. You can go back, look at the recent mini-series events for Market Vision 2020. You can pull up recent Trading Places recordings that we do here at EarningsBeats on Mondays and Wednesdays. For the Tuesday and Thursday shows that I do at the same time over at Stock Charts TV, you can go to the Stock Charts YouTube channel and find those. But anyhow, let's go ahead. I'm going to start right from the top. We're going to go in alphabetical order, and I'm just going to go through really quickly. I figure I probably have no more than about 8 or 10 seconds a chart to try to get through 100 of them in the time frame that we need to get through. So I'm going to go through these very quickly. This is not going to be a detailed analysis. Essentially, what I'm going to be going down very quickly to is looking at this relative strength line. Right there, I'm going to say AAL, no. Let's go on to Apple. Apple I've been talking about for a long time. Look at relative strength, continuing to move higher. The group continues to move higher, bullish. Adobe starting to show some strength here, and it did make a breakout on volume. I would say just follow the short-term relative strength line higher. I like Adobe. Analog devices, it is in the semiconductor group. We'll probably go over a number of these that look pretty good. ADI is not one of them. You got the group moving up, ADI on a relative basis moving lower. Maybe if we get this breakout, until then, I think there are too many other ones that look better. Automatic data processing, ADP, look at the relative weakness here. all the way down near a 52-week low. Yes, the stock is almost at a breakout, but look at this. Last 6-7 months, going nowhere. If you're in a stock that's going nowhere while the market's going higher, you're losing opportunities. Next up, Autodesk. Autodesk finally making a breakout. It has been a terrible performer in software. I think that's changed now. I've been saying we need to get a price breakout. We need to start to see relative strength. We've seen both of those. Autodesk is one I would keep on my list now. Align Technology, starting to show some nice relative strength. Don't allow this to roll back over again. It's in medical supplies. Medical supplies, if we can get the breakout and this stock continues to show relative strength, I'm fine with it. But if it rolls over on a relative basis and you start seeing this line going back down, be careful. Alexion Pharmaceuticals, no way. Biotechs have been on a roll. Alexion down near 52-week relative low. Avoid it. Applied Materials, love it. Been moving higher. Semiconductors moving higher. And Applied Materials moving higher. I do own Applied Materials, full disclosure. AMD, Advanced Micro Devices. Got to love this one as well. Big move up. This is the one I talked about in my blog article this morning. Up 130% in 2019 year to date. And you can see the relative strength moving up throughout the year. Now, here it looked like it was bad, but we never lost price support. And so relative strength is a nice confirmation tool. I don't trade exclusively off of that, and this is why. In fact, I am pretty sure that on this day in early October, in the daily market report I sent out to EarningsBeats members, this was a great time to take a shot with AMD. Now, of course, I didn't buy it, unfortunately, and it did continue to move higher. I probably would have traded it and been out of it long before it went up to 42, but that's the beauty of price support and getting a false breakdown. There's a hammer right there. Great looking chart, though, still near a 52-week relative high. All right, AMGen, beautiful move up. Biotech's moving up. New 52-week relative high. Love AMGen. It's in one of our portfolios at EarningsBeats. Amazon, nope, not yet. Been moving down. The group's going sideways. Had a good day yesterday, and of course, Amazon had a good day yesterday, but it's got work to do. Let it get through 1850. Let it get through the sideways consolidation, and let's see the relative strength pick up. It's down near a 52-week low relative to the broadline retailers. Stay away. ASML, beautiful move up. Another one in the semiconductor space, and it is near a 52-week high. I like it. Activision Blizzard breaking out above this double top. Volume could have been a little greater, so that makes me a little nervous. It still hasn't broken to a new 52-week high. Well, if it can hold the 20-day and price support, I'm okay with it. Otherwise, I think there are others in the internet space I'm sure I'd prefer. AVGO, another one in the semis, just broke out, tested its 20-day, trying to move back up again. You do not want to see this move to a new relative low. Semiconductors, it's a rising tide lifts all boats kind of thing. Semiconductors have been lifting many of the stocks in the group, but that doesn't mean that they're leaders. So pay attention to this overall downtrend that's been in play. I think we still need some more work here out of Broadcom. Baidu starting to show strength in November, coming back up. Beautiful move up, a little bit of a cup, maybe a handle and a breakout. Breakout above 125 would be bullish. Now, look at the internets and look at the relative strength. So, yes, it's starting to look better. This could be a change in character off that downtrend. It's got some more work to do, get through 125 and show some relative strength, but it is beginning to at least look decent, like something I'd want to continue to review. Biogen, big move up, sideways consolidation, looking to break out. Relative strength did take a big pop back in October, pulling back a little bit. I really like the biotechs. I think Biogen goes higher. Booking Holdings, got an uptrend in play, but big volume sell-off in November with earnings. One thing I'll say about this stock, it's showing relative strength, and January through May, this is one of the most amazing seasonality stocks out there. This stock loves January through May. So if it makes the breakout in January or late in December, keep that in mind. Biomarin Pharmaceuticals really starting to strengthen here. Beautiful move, as I said earlier, on the biotechs. Not really doing anything other than just going along for the ride, though. So I think there are other biotechs out there better. Cadence Design Systems, this one has been downtrending for a while. As it consolidates, it made a huge move. It went from, I think, around 25 to 75 in less than a year. So let's give it some sideways consolidation time. I think down the road, this will be a good stock. Right now, I'd need to see this downtrend break, relative downtrend. Cerner Corp starting to turn back higher again. Another one had a huge move up, pulled back, almost like a long-term cup forming. Right side of the cup, nice increase in volume. Let's get a breakout on the relative strength to a 4 or 5 month high, get that breakout in price, and then I think that would be a better trade. Checkpoint CHKP, not liking this one. It's breaking down on its own absolute chart, and you can see the relative strength versus software 52-week low. Stay away. Charter Communications, beautiful move up. This is in the broadcasting area, and it's been one of the leaders. Decent volume trends. I like it. Comcast now trending lower below its 20-day moving average. Volume picking up on the down move here about a week and a half ago as well. Look at the relative strength. 52-week high to 52-week low in 6 weeks. Not interested. Costco came out with their earnings, pulled back a little bit, starting to strengthen. I think what we're seeing here is just continuing sideways consolidation. I actually got a little frustrated with Costco. I owned it for a little bit, ended up selling with a small gain. But I still like the company. Love to shop there, by the way. I think their overall uptrend is still in play. Costco, I think, is still solid, but I want to see the breakout and some more relative strength. Excuse me. Just grab a little bit of water here. All right, Cisco downtrend, sideways consolidation. That is a bear flag. It broke down out of it, trying to strengthen back, and the volume's not light. So it is trying to make up for some bad deeds throughout much of 2019. It's starting to show a little relative strength. I don't know. I still, given what the market's done, I'd look elsewhere. CSX moved down, sideways consolidation. Railroads trying to break out. CSX down near 52-week low. Look elsewhere in the railroads. CTAS, just talked about this one, just came out with earnings. I think probably looking at some sideways consolidation. Not a bad looking stock, but I'd really like to see that relative strength line turn back up. Let's get this breakout through 274-ish. Cognizant Technology Solutions, CTSH. Downtrend, sideways consolidation, awful relative performer, not interested. Citrix Systems, beautiful move up, pullback. Did show some strength here on this initial move, but keep in mind it is in the software group, which has been on fire. So this recent sideways action is what's causing this pullback. You do not want it to go all the way back down here, though. It needs to turn, break this downtrend, this relative downtrend, and get back up, move through 114. I think there are others out there better than Citrix. DLTR, Dollar Tree, no thank you. Big volume move down with earnings. Relative weakness down to a 52-week relative low. Not liking that one. Electronic Arts, trying to make a breakout. 107.50 will be the number. This one is in the internet space, and if you can see it break above this double top right here, that would put it out to about a 6-month relative high as it's breaking out to new highs. That would be a good sign. Look for volume, too. High volume would even further confirm that. eBay downtrending, big gap down with its earnings, hasn't been able to get back through that gap resistance. It's going to have to get through 36.5 for it to even consider it. Down near 52-week relative low. At this point, no thank you. EXC downtrending and on a relative basis downtrending. Nope. EXPE, big gap down. We come all the way back, fill this gap, start to roll over again. Relative weakness, not interested. Fastenal, FAST, beautiful move up. Cup, coming back down, potential handle. I actually would, as long as this relative support line holds here, this is actually not a bad looking chart to me. I like this big move up. I like the group, this push to the upside, the cup that's formed, and now this move back down could be setting up a great opportunity closer to 36. Fast looks good. Facebook, look at the relative strength on the versus its internet peers. Down not too far from about a 7-8 month relative low. That needs to hold. We don't want to see a breakdown in Facebook. Pick up in volume, move through the 50-day, something like that. Knowing what I know with relative strength would get me out of the stock. Fiserv, big move up, a little bit of a cup here. I think this one looks really nice versus software. It's one of your leaders. 21st Century Fox, been in a downtrend, starting to uptrend. If you're considering this the start of a nice relative uptrend, a nice relative or a nice absolute uptrend, fine. Don't lose the 20-day moving average. Gilead Sciences still needs the breakout. 68 has just been a really big pain in the you-know-what for Gilead over the course of 2019. And while the group's been soaring, it can't make a breakout, and as a result, 52-week relative low. Not interested. Alphabet, Google, moving higher. I think this is one of the better stocks in the internet group. I like Google. When I've done FANG analysis recent weeks, I've pointed out Google was one of my favorites because it was down actually in close to support areas. But it is a relative leader, and I like it going forward. Hasbro, gap down, relative weakness. Nope, not interested. Henry Schein, HSIC, unable to make the breakout so far. This would be an interesting level if it could make a relative breakout, but until it does, there are others in medical supplies that look better. IDEX Labs breaking down below multi-month support level here as we entered November. Hasn't really shown any better signs. Relative strength weak, no thanks. Illumina trying to strengthen, moving on the absolute chart to about a 4 or 5 month high. Relative, though, still not doing anything versus the biotechs. This is a great environment for the stock, and it's not leading. Insight, another biotech. This one is breaking out, has pulled back here. On a relative basis, not bad. Not the best one in the group, but certainly not bad, up near a 52-week relative high until the recent pullback. Intel Corp, nice move up, little cup. It's in semis. This one's starting to lose relative strength, though, and that bothers me a little bit. I would have liked to have seen with the volume here. You could argue it's consolidating sideways. Let's get that breakout through 59, some additional volume, and let's see that relative strength turn back up again. Until then, there are probably others that look better in that semi space. Intuit downtrending while the group's been uptrending. Not good. That relative weakness would keep me away. Intuitive Surgical, I do like this stock. Nice uptrend, nice little cup. It's in one of our portfolios. I just like this 52-week relative low, and then the move to the upside. Recently, this double top was about a 6-month relative high, and you can see the volume coming in as well as we try to make this breakout. This is a pretty big level looking back over the last year. Next week or so will be big probably for ISRG. JB Hunt, beautiful move up, been downtrending. We really need to break this downtrend. It has been holding up well versus the truckers, though. It's the truckers that have been coming down, pulling the stock down. If truckers, you see that the transports get moving again, truckers get moving, watch JBHT. It's one of the leaders. JD.com, nice little cup. This one had pulled back after earnings, tested the 50-day, nice little hammer. It is now rallying back up. Look at that new 52-week high relative to the broadline retailers. JD looks good. KHC, Kraft Heinz, nice move here with earnings, still sideways consolidating, just not enough relative strength yet. I'd pass. KLA Corp, like this one, big move up, nice little cup. During the cup, though, it's lost some relative strength. I think that picks back up again, especially if we get the breakout. Not the best stock in the group, but one of the best ones. Liberty Global, downtrending for a while. Don't even need to look at the relative strength. Not interesting. Here is one of your leaders in the semiconductor area. Beautiful move up. Nice little cup. Maybe a one-day handle. Not much of a handle, but it did break out. Volume picking back up again. Relative strength looks really good. Lululemon. I really like the stock. Breaking out recently, getting up over 230, pulling back to the 20-day moving average. But earlier in December, 52-week relative high. You have one of the leaders there. Marriott breaking out above the prior high in July. The group is breaking out. Marriott starting to show relative strength. So with the group moving up like this, Marriott looks good to me as long as that relative strength keeps pushing higher. Watch the rising 20-day moving average. Microchip makes the breakout above all these highs. This is a situation where it looks really good on the absolute chart, and then you look at the relative chart, and it had a 52-week high 10 months ago. So it's just telling me, yes, it broke out. Maybe the relative strength will pick up from here, but I would keep a tight stop on Microchip. There are other semis that have done much better. Mondelez, MDLZ, topped back in September. Been struggling a little bit, and you can see that in the relative chart. I'd pass. Mercado Libre, big move up, sideways consolidation, underperforming. Relative strength starting to pick back up again. Needs to make a breakout, though. Not interested at this point. Monster showing some strength. I like the gap up with earnings, holding that 20-day, trending higher, and you can see that relative strength starting to build. Keep an eye on Monster for 2020. Could be a monster. Microsoft, MSFT, big move up here. I do like Microsoft, one of the leaders in software. Hard not to like that stock. Micron breaking out. I think it reports earnings tonight. So keep an eye on that. Nice volume coming into earnings, but let's see what happens with earnings. I don't know, mixed picture on the relative strength. Maxim Integrated Products, another semiconductor, relative strength in a downtrend. No, thank you. Mylan, stock just trending lower. Don't even need to look at that one. Netflix, This is one that is just kind of teetering here. It did hold the 50. I thought maybe it was going to roll back over again, but it's come roaring back. Nice volume yesterday. That part I like. Relative strength, if it could move back up here above these highs, 3-4 month relative high, that would be awesome. All right, Norton LifeLock, gapped up, big volume here. I like this stock. It's starting to show some relative strength. Triple top on the relative strength. Let's get that breakout. Network appliance beginning to show strength again finally. It's in the computer hardware area. Relative strength, though, still lags. So even though it's been moving up, it's mostly because the group is dragging it up. NetEase, NTES, nice uptrend in play here. Beautiful relative strength. This is one of my favorites in the internet space. NVIDIA finally rebounding, and you can see the relative strength has picked back up here. NVIDIA, a leader. This one could have a nice 2020 as well. NXPI, nice breakout here, and again, one of the leaders in the semis. O'Reilly Automotive, big move up, sideways consolidation, pulling back on a relative basis during consolidation. I think it goes higher. Paychex, they reported this morning. I didn't see their results, but I can see sideways consolidation. Let's see what happens with its earnings. Relative strength, though, is very, very poor. I don't like it. PACCAR, beautiful move up. Relative strength is strong. Great volume trends. I like the stock. PepsiCo, sideways consolidation. Still near the 52-week high relative to soft drinks, though. And I think soft drinks starting to improve a little bit. So I think Pepsi could be pretty good. PayPal. Can we break out above this 112, 112.50 area? That's what I'm watching. Relative strength at this point says stay away. Qualcomm, big breakout on volume in November, pulled back to the 50, starting to strengthen again. Nice relative strength versus telecom equipment. Telecom equipment's been awful. So it's one of the best stocks within a very weak part of the market. Regeneron Pharmaceuticals, this one I actually owned, and I actually took profits on that false breakout there. And there's a negative divergence on the stock, so I'd like to see a 50-day test, but I still like Regeneron. It has just recently moved to about a 6-7 month relative high. I think if it pulls back, maybe even to 350, that might be about as far as it goes. If it pulls back, it may continue moving higher. Ross Stores continuing to move higher. It's in the apparel retail space. This is just a really good long-term performer. I have no problems with Ross Stores. Starbucks, I think we're forming a long-term cup. Big uptrend, rounded bottom, starting to show relative strength in the restaurant group. I think this is a good one. Sirius, nice move up. Little cup here, showing strength. It's been showing relative strength 6-7 months. I didn't even realize that. Hadn't looked at Sirius in a while, but that one looks pretty good. Synopsys, SNPS, big breakout back in August and September on volume. Sideways consolidating since then. You can see the relative strength is really, this is just too long. I don't know what's going on here, but that's starting to worry me, that length of time. Skyworks breaking out, big volume. It is one of the leaders in the semiconductor. Might be one of the best, maybe if not the best right now. I know I'm running short on time. I still want to get through this. We may go just a little over 30 minutes. C-Trip, downtrend, not interested. T-Mobile, breaking down, not interested. Tesla, really starting to show some strength here. Look at all this volume coming in, big gap ups, and now a leader. Very, very nice looking chart. Take-Two Interactive, TTWO, looks like maybe a cup forming off of an uptrend. In the meantime, relative strength is weak. Let's get a breakout above 127 or so and see some volume. Texas Instruments, gap down, rallied back, mostly just because the overall group. It hit a 52-week relative low in November. I like others better. United Airlines trying to get across there, 96, couldn't make it, pulled back. Relative strength weaker, multi-month low right now in relative strength. I'd avoid it. Alta trying to make this breakout, failed. Holding the 20-day so far. If it could come down, hold the 20 and break out, I think we may have a bottom in play. So Alta not looking good just yet. I'd probably wait, but look for maybe that breakout through 270. For Risk Analytics, beautiful move up, but it has been underperforming for a while. It's kind of a mixed picture. Look at all this volume coming in on this pushback to the upside. Relative strength has moved back to a new 5-6 week high, but it took a tumble on relative strength there for a while. I don't know. This one's a little bit more up in the air. VeriSign was a great leader until about 6 months ago. It's been downtrending, and you can see that on the relative strength chart. Vertex Pharmaceuticals, one of my favorite in the biotech space. Relative strength earlier in December, 52-week high. I actually think any kind of a pullback short term, this is a good-looking stock. Walgreens Boots Alliance pulling back. I think this is a key area right here around this 57, 58 area. I'd like to see it reverse and turn back higher from here. Workday, no way. I don't know what's going on here, but Workday is a no way for me. Software, relative to software, it's been horrible. Volume trends are awful. I don't know what's going on there, but stay away. Western Digital, trying to get back through gap resistance, but relative strength says no. I'd stay away from that one. WLTW, Willis Towers Watson, breaking out. Not one of the leaders, though, in the space. It's the insurance brokers. I think you can find better options elsewhere. Win is starting to show some strength. Oh, we've just opened. I can see a new trade there for today. Anyway, gambling stocks. Look at Win making a 4-month relative high. Volume coming in. Win is one you might want to watch for 2020. Xilinx, no thank you. Massive leader in the semiconductors up until earlier in 2019, and it has just not been good since. X-ray, Dentsply, sideways consolidation. Not looking bad, though, versus medical supplies. Watch for a breakout on this one. A breakthrough about 59.60 would be really bullish. And that is it. Got through them. Now I'm going to take you to the 3 you must see quickly. Cardinal Health is my 3rd that you must see. Gapped up with earnings back here in November. Gap support was 51.43. The stock was trading down at about $51 yesterday. And then in the last 30, 40 minutes, the stock went up and held support. Gapping down, we can see already today. So we'll see whether or not it holds today. But this is one that if it can come back up, close above that 51.50 level again, that could be a really bullish sign, especially if you get back through that 50-day moving average. Watch for maybe some sort of a reversing candle. All right, next up is, let me find my second one. All right, DHI. This is DR Horton in the home building space. The stock is consolidating, which is fine, off of an uptrend. You can see that that's what the overall home building group has been doing. This one wasn't far from a 52-week relative high just earlier in December. Watch for that relative breakout and watch for the home builders to break out again. I think they're going to. And then my final stock is HRC. This is Hillrom Holdings. I just like the sideways consolidation and then finally getting this breakout. Try and go a little higher today, but look at the volume picking up. Relative strength now has moved to about a 4-month high, and I like the volume trends and the breakout. So I think all of that combined, this one could be ready to run. All right, that is it for today. I ran 2 or 3 minutes over, but I did get all 100 stocks in, which I didn't know if I'd be able to get that in, but we did make it. I want to thank all of you for stopping by here again. We are going to have a shortened holiday schedule. Actually, there's just not going to be much of a holiday schedule in terms of these shows. I will do the one here on Monday for EarningsBeats. I will do the one on Tuesday for stock charts. And then from there until after New Year, there will be no more of these 9 to 9:30 shows. I'm just going to take a break during the holidays. But again, I will be back on Monday to do it here at EarningsBeats and then Tuesday at stock charts. But just want to let you know for your own planning purposes, through the holidays, we're going to take a break here, and we'll be back on January 2nd to do these shows again. Anyway, everybody have a great day. Happy trading all.